Corporate Finance Excel Practice Problem. In this presentation, we will work a practice problem in Excel related to schedule of cash receipts. We're going to have multiple scenarios that we will be working with. Get ready. It's time to take your chance with Corporate Finance. Here we are in Excel. We have the information on the left-hand side. We're going to put that information into the blue area on the right-hand side into our worksheet on the right-hand side. Notice we have two tabs we will be working with, Practice Problem 1 and Practice Tab 2. You may have 4 tabs on your Excel worksheet, but we got the 2 tabs are going to be where we work the problem. The other 2 may have an answer tab on your worksheet. We will be working through both of those tabs in this presentation, but we're focusing in on the first one, Practice 1, first. Then we have our information up top. We have the sales projections for March, April, May, June, July, and August. These are what we're going to have our cash flow projections that we want to take from that information. The sales, meaning the sales on account. So that's not the collection that we have on them. That's not the cash flow. Those are the sales we made. And then we also have the sales for January and February. We can think about these as the sales that actually have happened in the past. And now we're projecting out into the future. We need this information in order to calculate the receipts that we're going to collect on those sales that we had in the past, even though we're focusing in on the future months, March through August. So then we have the information for when we're going to collect. Percent of sales uncollected, 10%. So based on past information, we don't think we're going to collect at all 10% of the sales made on account. Then we have the percent collected in the month of sale. So we made the sale in the current month and collected in that same month. 35%, that's going to be our estimate, what we're going to use for our projection. And then we have the percent collected in the following month, the amount of sales that we think are going to be collected in the following month, after the month that the actual sale took place, 25%. And then we have the percent collected 2 months after the sale, which may well be the case, right? We might have a sale that happened, accounts receivable is out, it takes us up to 60 days to collect on those outstanding receivables. So we'll have to that'll add a layer of complexity because that's going to extend out a couple months. All right, so what we're going to do is we're going to pick up the credit sales. Now note once again, as I pick up the credit sales, we're focusing in on the projection time period March through August. However, we're going to include in our table January and February because those are going to be needed for certain items, including in this case the sales items, in order to calculate the collections on those sales that may happen in March and April. So we'll pick up then the amounts. These 2 amounts are the amounts that actually happen, January and February. And then these are the projected amounts that we're looking into, that being for March, that being for April, and then May. And then what comes after May is June. So June. And then we've got July. So July. And finally August. So we'll pick up the August here. So there we have those items. That's our starting point. What we're focusing in on, of course, is the cash flow, the collections that we're going to be getting. So we're going to have cash flows. We're going to consider the cash that's being received in the month of the sale. So we're going to get 35% in the month that the sale took place. I'm not going to do this for January and February because I'm not really focused in on those time periods. Those have already passed. I'm only using that information to put in our table so that we can pick it up for the periods that we're looking in onto, March through August. So I'm going to start here at March. I'm going to say this will be equal to the 45,000 that of the sales on account that we made. We're going to collect 35% of them estimated in the month that we are in. Then I'm going to do the same thing here. April would be this 57,000 times the 35%, and so on and so forth. Let's see if we can copy this across. If we were to do so, note what would happen. It would move this cell over. If I was to copy and paste the formula from here to May, it would move this cell over, but it would also move this cell over. I don't want to move the percentage over. I do want to move the month over. Therefore, the percent is in cell B16. B16, I'm going to put my cursor in B16. I'm going to select F4 on the keyboard. That'll put a $sign before the B, a $sign before the 16, making it an absolute reference. You only need a mixed reference, but absolute will work. Then I'm going to hit enter. Then I'm going to go back on it. I'm going to put my cursor on the autofill handle. Left click on it, drag that on over to August. And double check that it does indeed do what we want by double clicking on August. It's picking up the 35% times the sales number looks correct to me. We'll move to the next items. Then we have the 1 month after the sale. So this is where it gets a little bit confusing because we're working with prior months now. So if I look into March, then I want to say, okay, that means the sales that happened in February are now we're going to collect 25% of them cash being received in March. So this is where that kind of jagged thing happens. We got to go, okay, I'm taking the prior month now times the percent of the sales that we're going to collect in cash in the current period. Let's do that a few more times, and then we'll do the copy and paste thing. So I'll do it 2 more times. In April, we're going to take the sales that happened in March, and we're going to collect 25% of those. Let's do it 1 more time, and then we'll do the absolute reference thing. In May, we're going to pick up the sales in April times the 25% that we're going to collect in the following month in May. Now let's do our absolute reference thing. We're going to double click on this. Now I want this one to move over. Once I go to June, I want to pick up May, but I don't want the percent to move over. Therefore, I'm going to make the percent an absolute reference by putting my cursor in B18, which is the cell the percent is in, selecting F4 on the keyboard, which puts a $sign before the B and the 18, indicating absolute reference, or you can manually put a $sign before the B and 18. You only need a mixed reference, remember. Some people are very picky about that, but absolute will work, and therefore we will use it. So then we're going to autofill across. Let's double check one of these cells to see if it is indeed calculating what we think it should. July's picking up June times the 25%. That looks correct. So now we're going to do the 2 months after the sale. 2 months after the sale. So 2 months after the sale, we're still collecting 30%. So we're kind of lagging. It would be nice if we can increase the turnover and collect a little bit sooner. But, you know, as of now, the sales that happened in January, 42,000, we're going to collect, we think, 30% of them in March based on past history. So way back 2 months ago, sales in January, we're going to collect 30% of them in March. So then in April, we got to go 2 months back to February, and then we're going to collect 30% of them in April. And then in May, we got to go 2 months back to March. We're going to collect then 30% of them 2 months later in May. Let's do our absolute reference thing by double clicking on this. We're picking up March. We want that to move on over when we copy and paste to January, to June. But we don't want this one to move over. Therefore, we're going to absolute reference that second one by putting our cursor in the B20 and selecting F4. It's putting $signs before the B and the 20, or you can manually put the $signs in there. Then we will use the fill handle to autofill across. Double check that we are indeed having the correct calculation. So August is taking 2 months back times the 30%. Looks good. That gives us our cash receipts. So then this is going to be our estimated cash receipts then. Focusing in here, we're going to say this will be the sum function equals the sum of. And then I'm going to sum up the 15.7 down to the 12.6 and enter. There we have it. We can use our autofill feature now without doing any absolute reference or special stuff. Fill handle, dragging that across to autofill. There we have it. Let's do some formatting. Let's select the ones up above. Let's go to the Home tab font group. Let's put an underline on those ones, and let's select the ones down below. These are the bottom line numbers. So we're going to go to the Home tab, font, double underline. There we have that. Okay, so there's our cash flow there. Let's do a similar one, second tab, similar process. It'll be great now that we have this process down. We'll do it a little bit faster here. We're also going to add the accounts receivable activity so we can take a look at what that will look like. Okay, so now we have these sales projections for March, April, May, June, July, August. Once again, then we have the sales that actually happened for January and February. Similar type of layout for the percentages that will be uncollectible versus the ones collected in the current month, the same month of the sale, the month after, 2 months after. These all add up, of course, to 100%. All right, so we're going to do this again, same process. We'll pick up the sales up top, January and February aren't the months we're projecting, but we need that information for the cash receipts calculation. So we're going to add January and February into our worksheet. Then we've got March, and these are projections now, and May, and June, and July, and August. We'll pick up August. Then those are the sales that we made on accounts. Now we want to figure out what the collection on those sales were. The collections on the sales. We're going to start in the month of the sale. So in the month of the sale, we collected 35% in the same month. I'm not going to do this for January and February. Those have already passed. I need that information in order to calculate March's stuff later. So I'm going to start with March. So March is going to be equal to the 55,000 times the 35%, 55,000 times 35%, 19,250. Now I'm going to go right to the autofill here. So I'm going to double click on it. We need this one to stay the same in B, that's B16. So I'm going to put my cursor in B16 and select F4 on the keyboard, putting a $sign before the B and the 16, hit enter, put my cursor back on it, put my cursor on the autofill, and then copy it across. Note that you can also copy it across by just copy, and then selecting and pasting as well. Just make sure you're pasting, the normal paste item instead of 1, 2, 3. So similar process to that and the use of the autofill. There could be some differences in the autofill if it's trying to pick up like a scenario or something like that, a set of numbers, a routine set of numbers, a pattern. Then it might do something different. So you got to kind of be careful of that. But otherwise, it'll copy the formula generally in a similar way as copying and pasting would do. Okay, so then we're going to say 1 month after. So once again, I'm going to start in March. This time I'm going to be picking up February, the prior number. We got that jagged look now happening. Picking up the prior month times the 35% or the 45 collected in the following month. Enter. So there we have that. I'm going to use the autofill once again. So double clicking on this, I want the 45 to remain the same. So I'm in F18. I'm going to select F4 and enter. I'll typically use the autofill. So I'm going to put my cursor back on it, put my cursor on the fill handle, and drag that across to autofill. Then I'll double check to see that it does what I want by double clicking on it. And it picked up the prior month times the percent. That looks proper, looks correct. So now let's do the next item. This is going to be the 2 months after the sale. So we expect 2 months after the sale on account that we're going to still be collecting 10%. 10%. So I'm going to go into March. We're not going to be doing this for January and February. That we need the January information in order to calculate that. That's why it's been included here, even though the projection starts in March. So we're going to pick up that 63,000, multiplying that times the 10%. The 10%. Once again, we want to use the autofill, so I'm going to double click on this item. The B20, I want to make that an absolute reference so it doesn't move as we copy across. Therefore, I'm going to select F4, putting a $sign before the B and 20. Then I'll hit enter, go back on it, put our cursor on the autofill handle, left click, drag that autofill all the way across to August. Double check August by double clicking on it, picking up the prior 2 months prior times the 10% looks correct. Then we're going to do the cash receipts. So we'll pick up then the cash receipts. And there we have that. And let's sum this up now. Equals the sum of these 3 items for the cash flow. Let's autofill that across. No absolute reference needed. It'll move all the cells over relatively, which is what we want. So we'll grab that fill handle, drag it all the way to the right. There we have it. Let's do an underline up top. Let's select these items up top. And we will then go to the Home tab, Font Group, drop down Underline. Let's select the ones underneath it. And then we can go to the Home tab, Font Group, drop down Double Underline. So now we want to consider, okay, what would be the effect on the accounts receivable just for the activity that happened in March. Now, this is going to be a little bit tricky, and because notice that we would have accounts receivable prior to this, right? We would have accounts receivable from the sales that happened in January and February, a beginning balance in the accounts receivable. But let's just try to take the sales that happened in March through August and consider how much of them will be collected on and how much of them will have not yet been collected. So let's take a look at what this might look like. And you can do this kind of running receivable balance. It's really useful to do this now. So we're considering the balance sheet side of things now. And let's pick up our months then. We're going to say, let's start in March. And let's pretend accounts receivable is at 0 and just consider the sales that are happening for this period and the amount that will be collected on them in this period. So we're going to go July. Let's do it this way. Let's do this. So this is another way to use the autofill. So if I type in Mar for March, and then I autofill, I put my cursor back on it, it's gonna see a series, and you can see to the right of my cursor there where it has the series. So we can use that, and that's another function of the autofill. So if there's a pattern, in other words, Excel will typically pick that pattern up, including months or patterns of numbers that will be common patterns. Okay, so then we'll pick up the sales items. So the sales items would increase the accounts receivable. I'm going to autofill down here because it's going to pick up the relative numbers. So I'm going to autofill down, autofill. So there we have that. So it's picking up the relative numbers. You can see, double clicking on that and to pick that one up. Now I'm going to pick up the collection that happens on these amounts. So the collection in March related to the 55,000 I want to pick up, which is going to be the 19,250. So I'm going to put this, let's put this in as a negative actually. Let's say negative of that 19,250 because this is going to decrease the accounts receivable balance. So that means that after March, the 55,000, we collected 19,250 of it. So if I was to sum this up, it'll subtract the two equals the sum of the 55 and the 19,250, which will subtract them, giving us the 35,750. That's what's left in accounts receivable. We're saying of the balance that was received, you know, accounts receivable went up by the sales amount, 55,000, and down by the cash that we collected. Now, I'm not recording the 27,900 cash receipts or the 6,003 because those apply to the months of January and February sales. And we're starting as if the 55,000 was our starting point for the accounts receivable. So then in April, we had more sales that would increase the accounts receivable. It would increase the amount that people owe us. And then we had collections related to our time period of March and April. So we had the 21,000 related to April, the 24,750 related to March. We're not going to pick up the 2.6 because it's related to February outside of our range here. So I'm going to say, all right, let's pick up the collection. I'm going to say negative of the 21,000 minus, because I want it to be a negative number, the 24,750. Or in other words, you could put it in there this way. You could put a negative sum of these two items. So that'll take those two items and sum them up, but then flip the sign, making it a negative. So there we have that. And so now this is like a running balance that we'll have now. So this is the balance in accounts receivable after the prior period, after March, related just to March sales. And now I want to pick up that balance and then add the current activity. The current activity is a net increase of the 14,250. So I want to take the 14,250 plus the 35,750. How can I do that with a formula? We could say this will equal the prior balance plus the sum of shift 9, just the sum function. I'm going to select the 60 and the 45,750, which will subtract the 2 because the 45,750 is a negative number. Close up the brackets, shift to 0, and enter. So let's do that again in March. In March now, all the cash receipts relate to the period that we're looking at. So we got these cash receipts. I'm sorry, this is May. In May, these cash receipts relate to the current month. These relate to April, the prior month, still in our range. These relate to March, still within our range. So now we could simply pick up the cash receipts. So we've got the cash receipts. And then once again, notice the cash receipts are greater than the actual sales because we're collecting on items from the prior month here. So we have the prior balance plus, or now minus, the 650. So how can we do that? Equals the prior period plus the sum of these two, shift 0, closing up the brackets. So there we have that. Let's do it again. Once again, we're in June. So we have the 48,350 consisting of receipts on the current period, receipts on the prior period, receipts on the period prior to that, all in our range. Therefore, I could just take negative of that 48,350. And then we can do our formula again, which is going to be, so that means there's a net increase this time of the 9,650. So we're going to take the 49,350 plus that increase. So this will be equal to the 49,350 plus the sum of these two items closing up. And there we have it. So let's do this again. I'm going to say the 60, this is going to be in July. So July, let's pick up negative of this number. And August, I'm going to pick up negative of this number. And notice this running balance, I can nicely just copy it down now. Because if I copy it down, it's going to move this cell up top down 1. And it's going to move this summing down 1. So I don't need to do anything tricky in any absolute references. And I can just autofill this one down. And that's going to be our running balance type of formula. Very useful type of formula to get. It takes a little while to kind of set that up, but it's useful. It'll come up from time to time. So if you could set up this kind of running balance, that comes in handy from time to time. So amount expected to be collected or to be uncollected. I'm sorry, amount expected to be collected. So how much do we, notice we have this 10%, in other words, that we expect not to be collecting on. So how much then do we expect to be collectible, considering we have this 10% that we're expecting not to be collectible? So if we think about that, we're going to say, all right, we got the total sales. Let's pick up our total sales. This is going to be for the time period of March through August, the same time period. So I'm just going to sum up that total sales item, or I could sum them up basically here. So I'll pick up the total sales, which are going to be, I'm going to put it in this equals the sum. Let's pick up the 55 down to the 70 and close that up. Then the percent that we're going to think is uncollected, we're not going to collect it all, 10% we said, that was our estimate. So we're going to pick up the 10% here times the 10%. I'm going to make that a percent, go into the home tab, numbers, making that a percent. Then we'll underline it, go into the home tab, the font group, and let's underline that. That's going to be the amount expected to not be collectible. So the amount that is uncollectible, we're estimating, which is going to be equal to the 359,000 times that 10%. So of the total sales, we said that 10% were not collectible. Now, the running balance was at the 81,800 at this point in time of the accounts receivable. We expect that 35,900 to be not collectible. So we can then calculate the amount that we expect to collect on, which would then be equal to the 81,100 minus the 35,900, and that's going to give us our 45,200. Let's underline this. Home tab font group underline. Let's put the double underline here. Home tab font group and the double underline.